FNN, founded in 1961 in Kuala Lumpur, Malaysia, is a leading food and beverage company with a 4 billion annual turnover. Established in 1983 by John Fraser and David Calmer-Smith, FNN is synonymous with high-quality, halal-compliant products. The head office is in Shah Alam with popular brands like 100 Plus, FNN Fun Flavors, FNN Seasons, FNN Nutrisoy, FNN Ice Mountain, Rangers, and many more. FNN is one of the largest beverage manufacturers and distributors in the region. FNN operates in Malaysia, Brunei, Thailand, and Indochina, and is a subsidiary of Frasers and Neef Limited. FNN dominates markets for evaporated milk and sweetened condensed milk in Malaysia and Thailand, offering a wide range of dairy products under various brands. FNN exports its products to 89 countries and plans to expand its reach in halal markets. The company aims to provide excitement and enjoyment for a generation of consumers, ensuring pure enjoyment, pure goodness. Nestle, a global food and nutrition corporation, has been providing Malaysians with healthy brands and products since 1912. Established in 1912 as the Anglo Swiss Condensed Milk Company in Penang, the company expanded to Kuala Lumpur in 1939. After Malaysia's independence in 1957, Nestle began creating innovative culinary solutions under the Maggi trademark. Nestle's operations stem from their head office in the heart of Selangor, the 6 manufacturing plants across the country. Nestle Malaysia employs around 5,253 people across 6 factories offering products in various food and beverage categories. Among the most well-known brands are KitKat, Nescafe, Milo, Nestle, Nesquik, Maggi, Hard Purina, and Nespresso. Nestle Malaysia offers a wide range of products including baby food, bottled water, breakfast foods, bakery goods, delectable frozen foods, dairy products, drinks, ice cream, and pet care items. The company constantly creates new products and improves exciting one to meet the changing needs of the clients.
So, I will present about the financial performance. The first thing is how liquid the organization. Liquidity measures the firm's ability to pay its bill on time. It indicates the ease with which non-cash asset can be converted to cash to meet the financial obligations. Liquidity is measured by 2 approaches, which is using the current ratio and also acid test ratio or quick ratio. The first diagram shows good ratio performance of FNN. Although FNN company's current ratio in 2021 was 2.69 times and was decreased to 2.68 times in the following year 2022, they still can manage to maintain their current liabilities with their available current assets because they are very close to the average current ratio. Meanwhile, Nestle's current ratio shows an increase from 0.59 times in 2021 to 0.71 times in 2022. This also means that the company is able to manage their current liabilities with their current assets. However, they still have a low ability to pay its short-term liability on time. Therefore, to compare, FNN has higher liquidity than the Nestle. Next is quick ratio or acid test ratio. Based on the diagrams, it shows a good performance of FNN company's quick ratio in 2021 was 1.68 times and was decreased to 1.59 times in the next year 2022. Although it shows a decreasing value of quick ratio, FNN can still manage its current obligation because they have sufficient assets to be liquidated, as the considered average of quick ratio is not less than 1.0 times. While Nestle shows a lower quick ratio, which was 0.2 times in 2021 and increased a little bit to 0.21 times in 2022. The quick ratio shouldn't be less than 1.0 times in order to pay the liabilities. This tells that Nestle relies on the least liquid current assets, like inventories, to pay its short-term obligations. Therefore, FNN has a higher liquidity than Nestle in order to pay their short-term liability. The last one is inventory turnover. Based on the diagram, inventory turnover of Nestle is higher, which is 7.7 times, than the FNN, which is 6.26 times in the year 2021. In 2022, Nestle also recorded a higher inventory turnover, which was 5.98 times compared with FNN at 4.96 times. Thus, this shows that Nestle have the most effectiveness of inventory to generate sales in both 2021 and 2022.
Next, for operating profitability, we have 5 approaches to calculate them, which are return on asset, operating profit margin, total asset turnover, average collection period, and fixed asset turnover. The first diagram shows that the FNN company return on assets in 2021 was only 13% and slightly decreased in 2022 at 10.69%. This might be due to the decreasing amount of operating income in the following year. Meanwhile, Nestle shows a good performance on their return on equity, which was 26.34% in 2021 and slightly decreased to 25.41% in 2022. Although there has been some decrease in their return on assets, Nestle has the higher return on their firm's asset investment compared to FNN. The second diagram shows that Nestle was generating a higher operating profit margin in 2021, which was 13.71% rather than FNN at 11.43%. For the next year, 2022, Nestle also generated a higher operating profit margin at 13.55% compared to FNN at 10.02%. Therefore, it shows that Nestle has higher efficiency to generate profit more than FNN. Move on to the total assets turnover. The diagram shows that Nestle was generating a higher total asset turnover in 2021, which was 1.92 times higher than FNN at 1.14 times. For the next year, 2022, Nestle also generated a higher total asset turnover at 1.88 times compared to FNN at 1.07 times. Therefore, it shows that Nestle has a higher ratio, which is favorable and indicates a more efficient use of assets than FNN. The next table shows the average collection period of FNN in 2021 was 156 days, and it increased to 182 days in the next year 2022. This shows that FNN has not tightened its credit policy and the management of accounts receivable to be able to meet its short-term obligation within the year. This means that the company takes too long to collect its debt. Meanwhile, Nestle average collection period in 2021 was 70 days, and it increased to 88 days in 2022. This is because the credit policy of account receivable is not tightened with short-term obligation. Therefore, the average collection period of Nestle is faster than FNN because they have strong indications of a firm's liquidity over the account receivable. This table shows the fixed asset turnover of Nestle in 2021 was 3.11 times, and it increased to 3.41 times in the next year 2022. Meanwhile, FNN's fixed asset turnover in 2021 was 2.21 times, and it increased to 2.28 times in 2022. Therefore, the fixed asset turnover of Nestle is more effective than FNN because a higher ratio implies that management is using its fixed asset more effectively.
The next question is we want to know how is the firm financing its assets. This can be measured using the debt ratio. This ratio indicates the percentage of firm's assets that are financed by debt. The first diagram shows the debt ratio of FNN in 2021 was 22.39% and it increased to 28.78% in the next year 2022, which means the liability of FNN is continuously increasing in both years. Meanwhile, Nestle debt ratio in 2021 was 80.47% and it increased to 82.38% in 2020, which also means the liability continuously increasing in both years. Therefore, the debt ratio of Nestle is slightly higher than FNN, which means that Nestle risks being in default on its loan if interest rates rise suddenly is higher than FNN. The next is time interest earn ratio. This ratio indicates the amount of operating income available to service interest payments. The diagrams shows the interest earned of FNN in 2021 was 153.24 times and it decreased to 80.88 times in the next year 2022. Meanwhile, Nestle's time interest earned in 2021 was 17.47 times and it increased to 25.19 times in 2022. Therefore, this shows that the time interest earned of Nestle is increasing than the FNN, which means that Nestle is more capable as the company is paying the interest on its debt.
Last but not least, are the managers generate a good return on equity? This can be shown by this table, which is the return on common equity of FNN in 2021 was 0.06% and it decreased to negative 0.5% in the next year 2022. Meanwhile, Nestle return on common equity in 2021 was negative 6.01% and it increased to negative 0.07% in 2022. Therefore, the return of common equity for both FNN and Nestle means that they are earning a low rate of return on their investment.
The main factor that contributes to the success of FNN is continuing innovation. FNN invests in redesigning its product and processes to expand product variety and increase efficiency and productivity. New production chains and the complementarity of capacity existing chains can be facilitated by new packaging offerings and formats. The additional investment plan to allow the production of new products. FNN launched 13 fresh products with healthier option and a new face. Secondly is consumer health and safety. FNN has a brand promise of pure pleasure, pure goodness, which is committed to providing products that taste great while being nutritious. It develops products based on solid validation and scientific research while taking into consumer perception and tastes related to the changing lifestyle in Asia. FNN always offers its customers safe, high quality and affordable products. The last one is creating value for society. FNN is therefore not only interested in the company itself, but also in the needs of society and the improvement of social welfare. FNN continues to provide informative and engaging programs in Malaysia and Thailand. FNN has conducted several outreach programs to empower vulnerable groups, raise environmental awareness, spread holiday cheers, and encourage exercise and active lifestyle. FNN is deeply committed to creating value for society and therefore applies its approach to improving social well-being. FNN better capitalize on non-financial factor. The first factor is reputation and market development. Malaysian branch have a vision to become a leader in the country dairy and food retailers with products, standards and possibilities. They are an integral part of its offers, while it has launched several new products to highlight the FNN brand promises to enrich people's life. The second one is training and development. During the reporting year, the Group Human Resources Department focused on various long, medium and short-term initiatives in the area of employee training and development. Two initiatives have been implemented to train future leaders of the FNN Group through structured Group Human Resources Development programs. Upon completion, managers were able to develop self-improvement actions, plans to become effective human managers. The most significant internal risks to the FNN's financial performance. The first one is emerging risks that could affect FNN in the medium or long term. FNN have integrated key sustainability issues into their overall risk management and identified specific risks, opportunities and key priorities for the financial year that influence their strategic decisions. Specific sustainability risks are controlled by enterprise risk management. The next one is environmental risk. The globalization of the world economy is sensitive and vulnerable to the effects of extreme weather such as fires, floods, heat wave, etc., which can result in loss of life, destruction of ecosystem, destruction of property, or financial losses on a global scale. FNN identifies and analyzes potential threats to the organization from climate change. They will keep adequate supplies to support businesses and customers in the event of a disaster. FNN will create the full coverage to ensure high-risk items. The last one is technological. Like many industries, the food and beverage industry is sensitive to the impact of the development and application of technology and innovation to increase production efficiencies, reduce reliance on human labor, reduce long-term costs for the business and face constant change and consumer demand. FNN will continuously evaluate and the strength of their product portfolio, empower people, improve manufacturing and distribution efficiencies, and innovate their path to the market.
Political factor influence government intervention in commercial and economic environments, with taxation law being a significant issue for Nestle in Malaysia. Over the past 20 years, Nestle have benefited from decreased tax law, leading to high profit and increased research spending. Changes in tax policies may result from Malaysia's growing inequality. Nestle's tax management principles include complying with tax laws and obligations in all countries, including international treaties and OECD guidelines. They continuously monitor, adjust, and improve tax compliance and proactively identifying and fixing any gaps or error. Nestle acknowledged that taxes paid for governments are an integral part of their corporate social responsibility and creating shared value. Other factor that may affect current and future performance is economic factor. Economic factors such as the nation economic stage, inflation rate, currency value, economic performance, consumer disposable income, tax rate, labor market state, and interest rate affect Nestle. The company's third quarter of the financial year 2022 financial results show a 70% increase in sales, domestic and export sales, profit before tax (PBT), and profit after tax (PAT) growth. However, the company suffered loss in both PBT and PAT, with PAT record a 24.4% decline. Nestle Malaysia CEO Juan Aronos attributes the sales growth to growing consumer interest in nutrition and wellness initiative. Despite these challenges, Nestle Malaysia remains optimistic about significant development this year, but caution remains a watchword. Social factors influence businesses in the consumer or non-cycling sector, including entrepreneurial spirit, gender role, societal norms, tradition, health and safety attitudes, demography, and leisure activities. Nestle Malaysia use demographic to target clients based on age, gender, income, and education. For example, Nestle XL Lago targets infant and toddlers, while Nestle Milo, a chocolate malt milk beverage, appeals to Malaysia's youth and adults. The company also considers the parents' needed and preference for their product. Other than that, sustainability and environmental factors have become increasingly important for businesses, and with government and pressure group urging organizations to follow environmental standards, Nestle Malaysia aims to eliminate plastic waste from packaging by 2035, aiming for all packaging to be recyclable or reused. To tackle plastic pollution, Nestle is developing new material through the Nestle Institution for Packaging Science, which focus on paper-based materials and recyclable, biodegradable, and compostable polymers. Nestle faces risks due to its product-based organizational structure, which make it difficult to control quality of goods and service. This lack of regional divisions can slow decision-making and lead to backlogs, making expansion difficult. Nestle also relies on modest advertising initiatives, primarily print and television, which outweigh potential rewards. Social controversies such as the Nestle Maggi controversy in 2015 have also impacted the company bottom line. The controversy involved excessive level of lead and MSG in instant noodle products, causing significant damage to Nestle's reputation and business in India. The company faced multiple lawsuit, investigation, and fines, and had to destroy thousands of tons of Maggi noodle, resulting in a declining in sales and profits.
I will continue this presentation by explaining about the projection and recommendation. After evaluating the financial health of the FNN and Nestle organization in terms of revenue, profit before tax and tax profit, then stating their profit or loss and other comprehensive income. Looking ahead to 2023, Nestle has set ambitious target for itself. The company expects to return to an underlying trading operating profit margin range of 17.5% to 18.5% by 2025. Additionally, the company aims to achieve annual underlying earnings per share growth in the range of 6% to 10%. The total debt ratio is used to determine the extent to which a company can invest based on the amount of its current assets. For instance, a company with a high debt-to-capital ratio will take a large risk if they use their current asset as collateral for new commercial ventures. Given that Nestle has increased their debt from 80.47% in 2021 to 82.38% in 2022. Meanwhile, FNN debt ratio in 2021 was 22.39% and it increased to 28.78% in 2022, which also means the liability continuously increasing in both years. Lenders and investors will usually view a company with a higher debt ratio as too risky to lend to. Lenders will be hesitant to invest in the company even though the change in debt is not that large. Return on equity is an important measure for a company as it will compare with peer companies. By the return on equity, it measures performance and generally the higher the better. Performance ratio like return on equity focus on past performance to get a benchmark on future expectation. Business that have high equity returns are more likely to be business that are able to generate cash internally. Based on FNS 2021 and 2022 equity returns, it appears that return on equity is from 0.06% to negative 0.5%. From that, we can conclude that FNN is facing difficulties to generate profit on sales due to the significant difference in return on equity. In general, if FNN continues to earn low equity returns for a long period in the future, it means that their business is not so efficient in generating profit. Meanwhile, based on Nestle equity returns in 2021 and 2022 as well, it appears that return on equity is also declining from negative 6.01% in 2021 to negative 7.07% in 2022. Hence, we predict that the companies will continue to perform worse if return on equity continues to decline. Next, for the recommendation, in the case of debt ratio, in order to reduce and improve their debt to capital ratio, FNN and Nestle must take immediate action. Finding ways to increase revenue, improve inventory and accelerating debts are methods that can be used. Companies should monitor their debts carefully so that their debts are not higher in the coming year. The company can sell its asset and then release them. This will induce cash flow that can be used to pay off some debts. Another way is to increase sales. Companies can seriously focus on increasing sales without any increase in overhead expenses.
As the company increases sales, the additional fund can then be used to settle existing debt and then avoid taking on more debt. The company needs to be careful in the future where the company needs to check the background of the borrowers and existing customer before approving new debts, which is easy for the companies to plan in reducing the interest rate only for the customers. Next, the company must be wise to improve its sales strategy in terms of product marketing. For example, they can use social media such as the internet, television, Twitter or Facebook to create advertisement for the type of FNN and Nestle product variation to attract customers. Then, the company can also make plans to cooperate with charities registered throughout the state in the collection of holy charity donation and donation in terms of daily equipment including food, clothes and money for the place. So, that's all from our group. Thank you.